Good evening, everybody. What an absolutely gorgeous day on the Outer Banks. Fall, beautiful day. We are blessed. We are blessed to live where we live. I want to thank Dare County and the Chief Executive Director of the Outer Banks Association of Realtors, Willa Kelly, and our planning director, Donna Creef, for putting this together. And I think it'll be a very informative meeting this evening, and I want to thank y'all all for attending, and thank y'all for putting this together. I have the honor this evening as Chairman of the Dare County Board of Commissioners to introduce our guest speaker. Dr. Osborne serves as Chief Executive Director, Commissioner for the North Carolina Department of Insurance. And she's worked in the industry for more than 25 years. I got a few years on you, Doctor. I've been in it 42, and I know Fletcher's been in it quite a while too, so we got a few years on you. But as CEO and as a manager, and you own your own business and work for Fortune 500 company, Dr. Osborne's held the position of professor at Campbell University and as an MBA adjunct professor at North Carolina State, MBA Partnership International School of Knowledge. Boy, I'd like to go to that school. I need to go to that school. Management and Economics in North Carolina Wesleyan. So she earned her MBA from Campbell University and a doctorate in Business Administration degree from George Fox University in Oregon. So if you all will welcome Dr. Osborne, we're glad to have you with us this evening, Doctor. Please come forward. Thank you. Appreciate it.
So please just call me Michelle. But thank you very much. And Chairman, I appreciate all your comments and appreciate your having us here. I want to say on behalf of Commissioner Causey, he wanted to send us out, and I have a lot of folks here from the Department of Insurance, and you will be hearing from them later on. So we're here to help you and assist. We are public servants. Your tax dollars pay for our work, and we very much care, and Commissioner Causey, again, wants for us to gather your thoughts, your concerns, and take them back to the department for him to review. So I have Marla from the Public Information Office at the back, and then I have Mr. John Woodard. I think he lives close in, and he serves out here as an outreach. I have Susan Nestor, who is our Deputy Director, Senior Deputy over our health insurance, and I'm going to have her to share just a little bit about that. I know that's not what your main concerns are, but we certainly want to let you know that we offer that as well. I also have Lynn Steckel, who's my assistant, as well as Angela Hatchell, who is our deputy for agents. So if you're an agent or appraiser or adjuster, she's the one that you want to kind of connect with tonight. Also, we have consumer services here. Kathy Short's group, she deals with all complaints in regards to your property and casualty, as well as some health insurance issues. So I don't think I've left out, and we may have a CID person as well. So we got some police officers back there as well. So anyway, wanted to again say thank you. It's an honor to serve as your chief deputy. And just wanted to share that in 2017, Commissioner Causey was elected to serve for 4 years. We are one of 11 states in our union that actually elects a commissioner. How many of you knew that? Yeah, a few of you. So our state's set up a little different. We are also the Office of the State Fire Marshal, and we are also over all the engineering codes. I just like to always kind of throw this out. Does anyone know how many insurance agents there are in our state? A lot, too many, they said. Okay, so there's about 450,000. 300, it's shocking, isn't it? Yeah. So believe it or not, a lot of them are non-residents. There's about 150,000 that are residents, so we regulate about that many. And do any of you know how many firemen there are in North Carolina? This is shocking too, about 70,000. It's a lot of firemen. And just for fun, how many realtors are there? Ms. Willow Kelly might be able to answer this one. Anyone know? I'm going to get off the trivia, but I just find it interesting. But there's about 45,000. So, but we do not regulate realtors, but I just thought that was interesting for you all to know those figures. So anyway, Commissioner Causey is serving. He has a 4-year term, comes up the same time as the president. So I guess most of you know a little bit more about the North Carolina Department of Insurance, I think mainly because of the storms that you've weathered. And I want to also say that we respect, my favorite tree is the live oak. And it's because it's weathered all those storms, so I love that. So I guess one of the things we want to make for sure is we can't solve all the problems, but this administration very much wants to hear and make things better. So I'm going to briefly go over some of the things that I have learned in this position the last 3 years, almost 3 years, and how to make our state better. So one of the things that we found in Hurricane Florence is that we were shy 1.9 million flood policies. There's 10.6 million people in North Carolina. There's 326 million people in our country, about 7.5 billion people in the world. And North Carolina is the fastest growing state in our nation. And as we get more population, we're continuing to see more flooding. So we're going to talk a little bit about that and some of our incentives that we are doing to try to make that better. One of the things that we find is that, believe it or not, I serve as an advisor to App State University and the insurance school and East Carolina University, and I work with the students there and also the professors, and the research shows that App State University says that the Piedmont and the Triad area actually flood more often than the coast or the mountains. How many of you knew that? I hear somebody clapping. Okay. So we have issues across the entire state, and flooding is almost at a crisis for us. So we were shy 1.9 million flood policies. So we set up insurance camps for the first time. The Big I gave us a grant, and from that grant we came out in Hurricane Florence for some of those storms, and it was very concerning. So what are the things that we're doing? Number one, we're setting up town hall meetings, and thank you, Willow Kelly, and thank you, Chairman, again, and the board, and all of you for helping us get out here. So we've been setting up town hall meetings to hear more what your concerns are, and we're going to talk about some of the issues here from a standpoint of coverages, but I just want to talk about flood for a minute before we even go on the PowerPoint. So town hall meetings. Number two, we also recognized that we wanted to get FEMA involved. So we contacted FEMA, and of course we are not a part of the National Flood Insurance Program. I know the agents here know that, and probably most of you know that in the room, that we are state regulators. McCarran-Ferguson allows us to be state regulators, and so we do not do flood, but we're looking at how we can help our state. So number two was to reach out to FEMA. There were 34 counties or communities, not counties, but communities in our state that were not a part of the National Flood Insurance Program. Does anybody know what that means for North Carolina? What happens? That's correct. There's no disaster assistance, number one. And number two is that you can't get a National Flood Insurance policy, so you have to go to the excess surplus, which what that means is that it will not be regulated by the Department of Insurance. So if you have a claim or you have a problem, you cannot come to us to help you with that coverage. So that made an immediate concern for us because it showed that there was still opportunities for us at the state level. So the federal program, we continue to try to see how we could get those 34 communities to be more involved with the National Flood Insurance Program. But the issue in those communities is that it was the codes that they couldn't meet for the federal funding and for the federal assistance. So there's more to it than just being a part of it. It was very complicated. So the other thing we did was we realized that realtors, it's very important to realtors. I used to be, I had my real estate firm, so I know a little bit about being a realtor. I had an insurance agency and a real estate firm together. And so I understand the concerns from a realtor standpoint that if you all can't get insurance, then it's an economical disaster when that comes about and homes can't be rebuilt. So what can we do? So we asked the Real Estate Commission to allow us to continue working with them, and we came up with a class. So we've been offering free continuing education to real estate agents and insurance agents all at one location so we can learn about what insurance is and how it's covered. So that was one step. We had such a great response in our state with regards to this, that we're going to continue doing this in 2020. So the class is filled up. And I want to say thank you to the real estate agents. Thank you so much, because across if you've been a part of it, it has been very successful. So we have insurance agents and real estate agents together. The fourth thing we did is our state is a little different. I'm surprised you're not asleep yet. But our state's a little different than other states because we have what we call a rate bureau. And the rate bureau, if you don't know what that is, it's almost like a trade group, but it's not. But it represents the insurance companies and gives an aggregate, gives an overall statistical analysis of the amount of money they lose or gain, and then the current forms. So they actually come to us and ask us as a whole, as an aggregate, for a rate increase. So in order to get a new policy or product in our state, it goes through the Rate Bureau. So we requested, Commissioner Causey and myself requested the Rate Bureau to look at coming up with a flood policy so that we could offer it in a private market. Now, they just brought it to us. There's some things, most of all, I really like, but I'm here today because one of the reasons I want to hear what you all have to say about that. And I know there's some insurance agents here that have looked at it and hear some about that. So if we could get privatization of flood, it could offer some more benefits. The benefits that it could offer is better coverages, because we know the limitation of the National Flood Insurance Program. Does anybody know how much the limit is on a home? I knew you would all know it. And that's what I love about the coastal areas, that you all know the need to have insurance and how concerning it is when you don't have it. So it's $250,000. And so the privatization of flood will allow better coverages. It'll be based on your particular property. So that's a real good thing. It'll also, for agents, one of the concerns that we have found with the National Flood Insurance Program is that insurance agents, I'm very transparent, but agents, I understand because I was an agent. It's difficult because it's hard to maneuver. The platform's tough to go through and rate, and the commissions are low. So that's another issue. So the privatization of flood will allow a better policy, and it will also allow for agents probably, hopefully, to make more of a free market approach and hopefully better money. I don't know. That's not discussed in my area. I don't do contracts and that kind of thing. But I'm saying at least it'll give them an incentive to maybe because it takes a lot of time to write these flood policies. And probably you may get $20 after working on it for an hour, and it's a lot of work. So privatization of flood will give you better coverages and will also allow you to have more additional endorsements, and it should be easier for you to get. So we're hoping that the private market will take off with that. So I'm going to allow you to ask questions in a bit, but I wanted to kind of give you an overview of just what we've tried to do in the last year. Prior to that, and this is a really touchy, and I'm not afraid to go places where some are afraid, because life isn't perfect, and we have a lot of work to do, but I promise you I wouldn't be here if I wasn't willing, on behalf of Commissioner Causey, to step out and try my best to help you. Consent to rate is a concern for most of you out here, and we want to talk about that. It's not a fix, but what we first did was they used to require a wet signature, and if you didn't have a wet signature, it was according to Chapter 58 in the statutes. So if your rate exceeded after it went through underwriting, and for those of you that are totally confused about what I'm talking about, I'm going to put it in simple terms. You go see your agent writes a homeowner's policy for you and gives you a quote, kind of like going to the bank and getting a loan. You get a rate on your interest rate, but then it goes through underwriting. How many of you have ever experienced that, right? And you don't know whether you're going to get the policy or you're going to get the loan or not because it has to go through underwriting. Insurance is similar. It goes through a process of underwriting. And then the underwriting decides whether or not the risk needs to be more expensive. As a result, if it goes above a certain rate, then it goes above the Rate Bureau rate. When that happens, in Chapter 58, it required a wet signature. I will tell you, it was scary to me as an agent, and it was scary to me as a regulator to see that people didn't sign those forms, because when they didn't sign with their wet signature, the policy would be canceled, and you didn't know it sometimes, because you might have been on holiday in Europe for 30 days and get something through the mail, and the agent's trying to call you, and you've dropped that cell phone, you got a different cell phone, and then your house, I've seen this happen, burned down, and find out you had no coverage because the policy canceled even though you paid for it and even though you thought you fixed it. The good news is the legislators and the Department of Insurance solved that, and the CTR requirement is no longer required. Added to that is a bold statement, though, that says, this is what else we added, is that you're required, that insurance companies are required to put in large print that your premium is higher, so that as soon as you open up your deck page, you see that. The other thing I want to share with that is, so I know you're saying that doesn't fix it. I hear you. But the other thing we've done, because we can't fix all of it, it all has to go through legislation. But the other thing we've done is we're collecting data. With that, the insurance companies will now be giving us data to know how many homes in each district are consent to rate. That's huge. That's huge. So those are some of the things that we've been working on, and I hope I haven't totally confused you. But so the next question is, with all of that, are you prepared for the next storm? So hurricane season is just about over, right? But normally we put this on all summer. So in North Carolina, there are two forms. There is the HE7 and the HO3, and then there's the mobile home. So with this, you will find that a dwelling policy is more of a named peril policy. So with the dwelling fire policy, you will find that it is not as comprehensive as the other two forms. So again, there are two forms, the HE7 and the HO3 and the dwelling policy. I would encourage you to ask your agent whether or not you have a regular HO3 policy or a dwelling policy. It's probably not common to see the HE7 out here, so I'm not going to go at depth in that, but I do want you to understand that the dwelling policy is probably one of the most common for rental policies. And I want you to understand this because you need to know what kind of coverages. On the HO3, just like the HE7 and the dwelling, none of them include flood. I bet all of you know that. But across our state, in the Piedmont and Triad area, they haven't had to think about that until the recent storms. And we have been hit really hard there. So this just kind of gives you an idea about what the HO3 does. If your home is covered for $100,000, the replacement cost on it will cover $125,000. So one of the things you want to do is make for sure that your dwelling policy or your HO3 policy has enough coverage on the dwelling part, which is known as coverage A. I'm not going to keep going into depth here, and I don't want to confuse you, but I kind of want to just give you enough knowledge that you can at least talk to your agent and understand there's a named dwelling policy that has only the coverages that are covered, and then there's what they call a replacement cost policy, which is an HO3. And what that means is if your home is damaged, it will cover replacement cost up to 125%. But if your house needs to be insured at $150,000 and you've only got it insured at $125,000, you're going to be short by $25,000. So make for sure you and your agent have those conversations. So I want to talk more about loss of use, because this is what I found while being in the insurance camps were a real concern. When I was at one of the insurance camps, I was out there listening to how consumers were complaining and where they were having trouble. Some of the insurance industry was paying loss of use as soon as the governor declared an evacuation. Some were, and some weren't. So Mr. Woodard, you're an agent, and Mr. Fletcher, you're an agent. During those times, it makes it difficult for the agent because sometimes the companies were and sometimes they weren't, at least in the areas that I was stationed at. So what we did is we brought the whole industry in, and I'm sharing this because it may have happened to you, or it may happen to you, and I want you to know what to do. After that storm, we recognized that loss of use was being covered by some companies as soon as the governor declared the emergency. and some weren't. So we got a full, legal team together to determine what would be consistent and how we should do this. So now loss of use, if you read it on the form, it will actually say that if someone in your neighborhood or yourself, you can't get back to your neighborhood because your neighbor has had a claim and it's insurpassable and you can't get there, then it will be covered. The point is that you cannot cover it just because the governor declares a state of emergency, or everybody that leaves the island as soon as something happens, then everybody would be paid even if they didn't have damage or even if they could get into their home. So to bring consistency, it was determined that if you cannot get back to your home because your home is damaged or the neighborhood is damaged and you can't get back in there, that is when loss of use would be triggered. Is that helpful to you all? Did any of you have trouble with it? Loss of use? Oh, well, that's good. We had a lot of complaints at the department. All right. So a couple of other things. These are small things, but on your homeowner's policy, it does not automatically include refrigeration coverage. So please make sure that you ask your agent these questions. And there's a difference between flood and sewage. Sewage backup. If you're, got a sewage system that is with the city, you need to understand that there is a difference between sewage coverage and flood. So you need to ask for sewage coverage in addition, in my opinion. We've already discussed this earlier about the loss of use, but there's two different deductibles. There's the named storm deductible, and then there's just the regular deductible. And I'm sure most all of you know this, but you need to make for sure that you understand that as soon as that storm is named, your named deductible will come in effect versus your other deductible. We had a lot of confusion in the storm over that as well. You all probably have experienced this so much that you know these things, but maybe you'll learn something tonight while I'm sharing. So, flood and water loss. There are some key facts about this. Do you need flood insurance? Well, the commissioner is now saying if it rains in your backyard, you probably do. Because what we did experience, again, are floods in 500-year storms. So this is Goldsboro. So it's really inland. So folks that say that the coast is all the problem, it's inland as well. So what qualifies as a flood? So the two significant things here in this is the fact that mud flow. If you have a home in the mountains, that doesn't mean that you do not need flood insurance. Mud flow is included in a flood policy. So people in the mountains need flood insurance just like people at the coast. And the other thing is, remember the number 2. It's whether 2 properties or 2 acres that's not usually flooded. That is the definition of a flood, and that's what triggers flood insurance. So what is not flood? I just shared earlier the sewage backup is not flood. Bursting of pipes, that's not flood. Erosion from regular tides and currents, that is not flood. That's a real significant thing for all of you, is erosion from the tide and the water and currents. Wind-driven rain, I want to talk a little bit about that. And sinkholes are not part of it. Rain that enters a structure due to damage like from the roof is not considered flood. So those are the issues that we have found that have caused trouble, and I'm going to share a little bit of key hints how to deal with that. So what is wind-driven rain? That's a hard thing to explain, but the best way I have learned to explain it is if you have a house and you have a windowsill and the rain is coming down so hard on the side of the house and it hits the inside of the windowsill so hard that you see rain coming in the windowsill. That's the best way I can explain it. So if it's like hitting the side of the house and it comes up through the aluminum or the vinyl siding into the house, that's wind-driven rain. Wind-driven rain is a real problem with insurance coverage because it will not cover your personal property unless it's like covers like if your carpet's ruined or your side of your house on the siding would be covered, but if it ruined your grand piano, you need to make for sure that you talk to your agent about these specific things. So water damage from a windstorm Damage from rainwater that enters the home through an opening caused by damage from a windstorm. It is covered under your wind policy. I know most of you know this, but a lot of people that are new to the state do not know this. The coastal areas need 3 policies. I don't enjoy telling you that. So you have to have your regular homeowner policy and your wind policy and your flood policy. You all know that, right? Yeah, see, most people that in other areas, they don't because they've not been through the storms like you have. But, so these are the 3 main policies that you need. So flood coverage, again, you probably know this, that there's a 30-day waiting period. We often hear that people try to get flood insurance at the last minute, and it's too late. So we've already talked a little bit about the National Flood Insurance Program. So I want to mainly say this too, you probably know this, but your primary residence, if you have a primary residence, you must live in the house more than 50% of the time. In order to be considered a principal resident, the policyholder must, or their spouse must live in there at least 80% of the time. But as you can see, this is really important, only the principal resident. Only if you have a principal resident will you qualify for replacement cost. So what does that mean? If you cannot qualify for replacement cost, that means that your home is going to be depreciated in the event of a claim. So, again, private flood insurance, we're working on this because we want to try to allow you to have better policies that fixes these gaps. So that's why I went through all of this, is to say that we are looking at it in every angle to see what way we can fix these. There's a picture of our insurance camps. We're doing our free CE with the realtors and real estate agents. We're trying the private flood insurance. And I will say, I don't know if any of you know where Smithfield is. I know women know where the Tanger Outlet is. So there's Wilson Mills, and Wilson Mills runs right, there's the Neuse River. I love to kayak down the Neuse River. I saw an alligator one time in the Neuse River near Smithfield. I like to give you a little few things to kind of get your attention. So, but the Neuse River, Wilson Mills during Hurricane Florence, it almost crested. There are over 2,000 homes there. It was not a part of the National Flood Insurance Program. Wasn't at the coast, and it almost flooded. And those people, I would guarantee you 90% of them, maybe even 99% of them didn't probably have flood insurance. I was really nervous coming back from Wilmington and all the places that we were, looking at that river thinking if it crests, there's going to be more people inland that are going to continue to have total disaster. So what I was going to tell you is that Wilson Mills now is part of the National Flood Insurance Program. I'm glad to share that. So the private flood insurance, again, if we can get private flood insurance to the market, which we're trying really hard to do, those will be admitted carriers, which that means we will be regulating it. So when you're upset and you don't feel like an insurance company has treated you properly, you can turn to us, because we will be sure to make for sure that the company adheres to the guidelines of the form and policy. Here, mandatory flood coverage. Structures secured by federally insured mortgages must carry flood insurance if they are in a special flood hazard area, Zone A or V. And other structures in Zone A and V may purchase flood, but it is not required by federal law. Structures in other flood zones like B, C, and X may purchase flood, but is not required by federal law. I wanted to say to you also, again, we talked about the $250,000 that's required, and that excess coverage is available in private insurance companies, mainly through excess surplus. But again, we're trying our very best to make sure that we can get this out to the marketplace soon. The NFIP will not allow flood insurance to be placed on structures in the CBRS area. I'm sure you all know this, and it was built prior to 1982. If coverage is placed in error and a claim occurs, the claim will not be paid. Only premiums will be refunded. I know you all know well the flood maps, and I'll be more than happy to share this PowerPoint presentation with you and email it to the chairman here and allow you all to get it. And again, you can go to FEMA.gov at the portal and get the flood maps. So what I do find interesting here is with the FEMA grants is the highest priority are severe repetitive losses. The application is made through your local government. FEMA may pay up to 90% for repetitive loss property mitigation, and it can be coordinated with the state and local grants. But ICC provides up to $35,000 or $30,000 to elevate, demolish, and relocate your home. So again, we're not a part of the National Flood Insurance Program, and we do not regulate it. So claims handling, wind or water. Another issue that we find is whether a claim is a wind claim or a water claim, a flood claim. It's very difficult. If it truly is a wind claim, we regulate it. If it is something to do with hail, we regulate it. We regulate all the regular homeowners, just not the flood or excess surplus lines. So how does the National Flood Insurance Program claims adjusting work? These adjusters are independent, and they must file the proof of loss form before the deadline, or you must file it. And there is a way to have a resolution with them. You have to appeal to FEMA, but it's under federal court jurisdiction. So if you have no flood insurance, this is what you have to do. You have to take photos of everything. And then FEMA will ask you to apply for a small business loan. That's so confusing to folks because you're an individual and you're wondering why you would have to apply for a small business loan. That's how it works. Any money greater than $25,000, they will put a lien on your house. I've seen so many people misunderstand in our state where they'll say, well, FEMA will take care of me if I don't get flood insurance. That is not the case. And again, this is a perfect example that if FEMA gives you more than $25,000, then you're going to get a lien on your home. Another thing, if you have not paid your taxes, you will not be receiving any money from FEMA. The National Flood Insurance Program versus FEMA. The average FEMA grant in 2017 was approximately $4,300. I share this with you not to pick on FEMA. We've worked very well together. I share this with you because I want you to be aware and tell your neighbors and your friends, even though you probably have learned this through all the storms you've weathered, I don't think many people know that FEMA grant in 2017, the average was $4,300. That's surprising, isn't it? It is. The average flood insurance claim was $115,000. So you can determine whether you want to chance that and get paid $4,300 versus $115,000. So let's talk a little bit about the NCJUA, the North Carolina Joint Underwriting Association. Ms. Gina Switzgable is our CEO. She does a great job. We are in contact. We work together, and she has kept the beach plan very, very healthy. So I just would like to say that if you have a concern, these are some really important numbers if you want to take a picture of that. These are important phone numbers that you might need in the future. I do also want to go back there real quickly. That's something that people don't know. I know you're looking at all these slides. She's going to go through all these slides. I'm not. But you have up to 3 years by our statute to file a claim. Indiana is 1 year. I believe it's 1 year in Indiana. So we are very consumer friendly in our state by statute by allowing you 3 years. So that's significant. And you can see that over here. So again, I want to remind you to get 3 policies. You need a regular standard homeowner's policy. I would recommend getting a comprehensive policy like what they call an HO3. I don't know who named it an HO3, but that's one of the most common policies. But on the HO3, make for sure that you have enough coverage on coverage A, because the replacement cost only goes to 125%. If you can get an HE7, then it's unlimited, but I don't know that you'll find that. Wind and hail, flood, and I also can't help but say, have an umbrella policy, a catastrophic policy over the top, because what that means is your homeowner policy usually allows you $300,000 liability, and I know I may be talking over your heads, but this will at least make you want to ask your agent all these questions. But I would encourage a catastrophic policy, not over your heads, but just the stuff gets kind of boring. It's insurance lingo, but $300,000 is usually what most people get on their homeowner's policy for liability. So a catastrophic or umbrella policy will cover you for liability if you were to have a bad accident, car accident, and hurt someone, or if someone if you have a bad dog and they attack someone, your umbrella policy would be triggered. So in our state, we have what they call a disaster mediation. So the Commissioner of Insurance may issue an order establishing the disaster mediation program, which is what I'm going to talk about today. We've been waiting, we've asked, we've wanted there to be an emergency disaster relief for the folks from the hurricane that we've most recently experienced. As of 10/17, the governor declared it, and Commissioner Causey as well. So what does that mean to you? So I announced this today, or this evening, that you will actually have 60 days additional time to pay premiums if you're in a hardship. So that has been declared, and the bulletins went out this past week. So I just wanted to let you know that. This is the process of the disaster. I'm not going to go through all of that because I can't see it. But you can feel free to ask the folks here tonight that I brought with me to talk to you one-on-one. So last of all is the Department of Insurance is really, Commissioner Causey really wanted us to be an extremely friendly administration. So he has said he wants for you to be able to have communication with us even better. I know that I live with my phone, and now I've gone to an Apple Watch, which is, I feel like, I don't know, futuristic here, talking into my wrist. But the mobile app you can download from our website, www.ncdoi.gov. How many of you know about it? Probably the agents know. How many know about our mobile app? Raise your hands high so I can see. Great. How many insurance agents do I have in the room? Okay. So if you don't know about this, I'll tell you for insurance agents, this will allow you to go on and you can get your continuing education requirements. You can put your NPN number and it will tell you, you won't have to go on the old clunky website to figure out whether you have adhered to the continuing education requirements. You can look right on your phone. It will also allow you to see all of the courses available to you for CE. And also, if you want to make a complaint, you can make a complaint to the commissioner or to myself. Hopefully you won't be complaining about us tonight, but you can go on and download it, and you can go and put any kind of complaint you have on a company or even a positive comment. You can communicate, and I promise you it will get to the executive floor of our department. So please download our app. The app is going to continue to grow. We're going to actually have information as to where insurance camps are going to be set up. So should you be hit with a really bad storm, we will let you know where we will be located and where we will be setting up with FEMA and the industry. So that's what it looks like. And again, you can file a complaint there. You don't have to go onto the website. You can do it right from your phone. So I want to just have Angela to stand up. Angela, if you would stand up. This is Angela Hatchell. She's our deputy over agency services. As I was sharing with you earlier, these are our adjusters and agents. Altogether, it added up to the number I shared with you earlier. And she's over all the licensing. I will just share with you that one of the concerns, too, that we've had is public adjusters, or adjusters coming in from out-of-state adjusters coming into the area, and they do not know coverages, and you guys probably get frustrated because they come in and then you find that they leave. So we're trying to see if we can get legislation to be changed. It's going to be one of our goals this year on making sure that they are required to do some kind of webinar or testing before they come out here and do a better job of policing that. So Angela is here, and she will be able to talk with you about that if you have complaints or concerns that you want to share specific to that. We're going to work on that. Fraud. Commissioner Causey, when he came into office, we found out that we were only returning about 5% of the calls on fraud. We had 20 police officers. We were arresting about 20 persons a month. He got approved to get an additional 20 police officers. They're sworn police officers. We have them at the back here. And so now we're arresting about 40 folks a month. So fraud is a real important thing because you all pay for fraud. It's in your premium. So when people cheat and steal the insurance companies, you pay for it. Commissioner Causey is very concerned with fraud and has done great work to try to stop it. So I'd also like for Ms. Susan to come. So Susan's just going to give a real brief program or a real quick review of what she does with SHIP and Smart and See, because this is a program that many of you do not know about, and I really want you to have the opportunity to know about this. Oh, and one last comment. I want to share this about the rate filing. Again, I'm telling you, I'm going where many folks would be afraid to go. Anytime the industry asks for a rate increase, it's always a concern because we are your regulator and we're here to protect consumers. It's one of the toughest parts of our job is to make for sure that we keep the market stable because we don't want the rate increases to be so high that it's an economic burden to you. On the other hand, we can't make it where they never have any rate increases at all because if they don't, with the storms and the impact, then it can cause issues. In the past, I think that there's been rate increases that were significant in certain counties, certain areas, but then it would always appear in the newspaper that it was a 1 or 2% rate increase, right? Have you experienced that? And then yet you were hit hard? So we have made it as best that we could by saying, no, we do not want those high rate increases hitting you when they're asking for 45 and 50 and 60% and 70 and 80 and 90% rate increases in certain areas. So I want you to know Commissioner Causey says we're not going to do it that way. We are going to try to do it increments. And of course, we know when storms continue to happen, there's going to be a need for some rate increase. And I know it never will make anyone happy, but I hope that you were happier with this rate increase. I know you're not happy with the rate increase, but the way in which it was done versus having big lifts. And I wish you never had to have a rate increase ever, but I also want to make for sure that you have companies to write your risk because we don't want you here without having homeowner insurance coverages. So I want you to know that we care about the coast as much as we care about the West, as much as we care about Raleigh. You're North Carolina, and we're here to serve. And I brought the list of the rate increases, and I'm willing to talk about it. Thank you.
Thank you, Michelle. Again, my name is Susan Nestor, and I'm the Senior Deputy Commissioner of the Health Services Group. And I just want to briefly share with you to make sure everyone here knows about 2 amazing statewide consumer assistance programs that are available to you at no charge through the North Carolina Department of Insurance. These programs exist to help you with your health insurance issues. The name of the 2 programs are the Health Insurance Smart NC program and the SHIP program, otherwise known as the Senior Health Insurance Information Program. How many are aware of the SHIP program? Great. How about the Health Insurance Smart NC program? Okay, well, we're going to chat. Okay, so the Health Insurance Smart NC program, let's just talk about as being for individuals under 65. If you're covered under an individual plan, a group plan, you bought a health insurance plan off the federal exchange, you're covered under a self-funded plan, or you're covered under the North Carolina State Health Plan, you're a state employee like I am. This program is there to help you when you have a health insurance issue. If your health insurance company has denied a medical service, perhaps you and your doctor thought you needed to have knee surgery and they submitted the paperwork, and the insurance company said, we don't think that you need that procedure, it's not medically necessary. Did you know that there's a division at the Department of Insurance that can help you with that? That they will file that medical appeal for you on your behalf, and again, at no cost. If you fail to win that appeal, there is what's known as an independent medical review program that we will assist you with that as well. We'll talk to you in counseling and let you know what your rights are under North Carolina law. Again, as I said, we'll do consumer counseling, medical appeals, file complaints, and external review. And again, this is available for you at no charge. Just a few things, the way consumers find out about this program. If you've ever received a denial from your health insurance company, look on around page 5 or 6 of that 8 or 9 page correspondence that you've received, and you would see notice about contacting the Department of Insurance or the Health Insurance Smart NC program, it's there to assist you. And our phone number, all contact information, all that information is available to you. Like tonight, the fact that almost none of you had heard of that program, but you'll leave tonight saying, there's a program there at the Department of Insurance that could help me if I have a complaint about my insurance company, or I've received a denial of coverage, or I have general questions. Yes, we're here to help. Okay, let's talk again just briefly about the Senior Health Insurance Information Program. This program, as we all know, is really everything about Medicare. SHIP assists consumers when they have Medicare questions. They are getting ready to transition to from going from 64 to 65 like I did, and they'll help enroll me in Medicare in Part A, and I deferred Part B because I'm still working. They will answer questions and assist with Medicare Advantage or during open enrollment period, which is going on now. I also want to make very clear that the volunteers that assist, and we have 900 SHIP volunteers in all 100 counties. The SHIP volunteers are not health insurance agents. Be very clear on that. If a consumer has a question about their health insurance coverage, they need to speak to their health insurance agent or to the health insurance company. And that is what the SHIP volunteers will now make very clear. We're making that very clear on documents that are coming out of the Department of Insurance. The SHIP volunteers and the SHIP program is an amazing resource to seniors. But I did want to clarify that, make sure you knew that they were not health insurance agents. The program actually in North Carolina began in 1986, and when North Carolina established its own SHIP Medicare program, and then it became a federal program in 1990. Again, so if you're like I did, turning 65 this year, if you know someone has questions about their Part D drug coverage, Medicare supplements, again, you can call the Department of Insurance. When you call in, it's option number 1 on the toll-free line, or you have a SHIP coordinating site in every county you live in. If you're not sure where it is, please call the Department of Insurance. We're happy to help you, tell you where it's located, and to answer any questions. All right? Thank you so much for the opportunity to speak.
Good evening, everyone. I'm Willow Kelly. I'm CEO of the Outer Banks Association of Realtors. Prior to taking this position about a year and a half ago, I served as the government affairs consultant liaison to both the Outer Banks Home Builders Association and the Outer Banks Association of Realtors for almost 12 years. In that 12-year time period, insurance was a major focus of what we were involved in and working on your behalf, not only the members of our association, but everyone in our community, in really trying to find that common ground where we could work together, find a balance between what is mandated through general statute when it comes to your insurance rates, that they should not be excessive, that they should be not unfairly discriminatory, they should be adequate, they should provide reasonable profit. And so those are the factors that go into the rate-making process. And I will tell you, 10 years ago, the only thing I knew about my property insurance was when you get the renewal notice, I knew how much was due and when it was due, and probably like a lot of you in the room. I did not know about all of the legislation, everything that went into the rate-making process, the role of the Department of Insurance, the role of the Rate Bureau. And fast forward, here it is, almost 2020, we're still talking about insurance. And what I found over the years is so many policyholders are intimidated when they get that renewal packet, and it looks like, oh my gosh, a bunch of legal documents, and it looks like kind of a 3D movie that you need some 3D glasses to kind of put on and see clearly what's in there. So in having conversation with several people in the community, how do we communicate to the policyholder? How can you be an empowered policyholder? So that's what this whole community conversation on property insurance is about. And I can't thank Michelle Osborne, Dr. Osborne, and her colleagues for coming here today and sharing information with you. Thank you so much for that. We've been working on this past year. So we're going to tell you now how to be an empowered policyholder. Dr. Osborne covered a lot of the information already, and I'm going to summarize it in a few slides here. I'm going to show you how you can save hundreds, if not thousands of dollars, because I've seen it happen, and we've done it. So what does it mean to be an empowered policyholder? What does to empower mean? To empower, make someone stronger and more confident, especially in controlling their life and claiming their rights. You need to be empowered when it comes to communicating with your insurance agent. You need to feel empowered. You need to be confident. You need to know what questions to ask, because what you don't know could be costing you lots of money. And why do you need to be empowered? Because the cost of property insurance not only affects the ability to qualify for a mortgage. As realtors and members of our association, they're working with buyers on a day-to-day basis, and the cost of insurance does affect closings. It affects someone's ability to qualify for a mortgage. But more importantly, you can be 10 years into your mortgage, and all of a sudden, there's a change in Congress on flood insurance, and your flood insurance is going from $1,200 a year to $15,000. Guess what? You're losing your house. It's very important. It is very important. It impacts one's ability to maintain their mortgage more importantly than qualifying, and it impacts housing affordability. So the more you know, the more you can save, because what you don't know could cost you. Let's talk about a few examples here. Just 3 weeks ago, somebody came into my office. I gave a presentation, Southern Shores Boat Club. Lady came in, father was looking at a flood insurance renewal, premium due the next day of $11,000. And where's the house? Southern Shores, slab on grade, 50 years old. I'm like, I don't think there's going to be anybody to help you. But I was told by some of our partners here, and I would like to take the time just for a moment to recognize, I need to give special thanks. We've got some community partners here. Steve Bonday with Bankers Insurance, right over here. I've got Jackie Chun with Elite Insurance right here. They'll be available for you to talk to. And then Mr. Stephen Gillis, who couldn't be here, from State Farm Insurance. Those are community partners of our association that have been working closely with us. And so I called and I said, wait a minute, I think I heard that the private market is writing flood insurance. The private market has come in here and is writing policies. Within, I don't know, 15 minutes or so, we found a policy for $3,500. She saved $7,500 just within minutes in finding another policy and knowing that the private market was covering. Years and years ago, and I see Duke Garrity in the back of the room, there was a gentleman who was the poster child for why we need to fix the system. Joe, $9,000, he was looking at premium in Manio. He was gonna have to move. He said, I can't afford it, I'm in a wheelchair, I've got a wheelchair ramp, no bells and whistles in my house, there's not a gold toilet. That's not gonna have to be replaced. So we looked at his policy. And there's a few things that happen on your policy on your declaration page, and we're going to talk about 3D vision here in a minute. His premium, due to an inflation rate factor being applied to his dwelling value, that coverage A, it kept going up and up every year, even though we had no rate increase. We can see no rate increase, but yet your premium keeps going up. Well, you have an inflation rate factor that's applied to the cost of your dwelling. And so it got so out of whack that it was probably overvalued $200 and some thousand. He not only had to have homeowners, wind, and flood, but the bank required him to have excess flood. We were able to work with Joe and say, you know what, we need to fix this. And, you know, no fault of the agent, comes from corporate, he gets his renewal notice, et cetera. And we ended up finding him coverage for somewhere around $2,500. Another situation here just this year, talked to a homeowner. They were looking at their policy, and at renewal, they found that they were a primary resident, lived in their house year-round. It had been a rental. They had been living in it for 14 years, and things slipped through the cracks. Guess what? He had a dwelling policy. As Dr. Osborne already shared, dwelling policies, you have to have a separate liability policy. It's not great coverage. And if he would have had a loss, that's when he would have found out he did not have the coverage that he needed. So you have to know the difference there. And we talked about the inflation rate factors, another situation where a house about $125,000 in value to rebuild was up to $284,000. The reason that is so significant is because that number affects the affects the deductible that you pay. So you need to pay close attention. All right, let's talk about the 3 Ds. You get your policy renewal. It's this thick. It's got all these kind of exclusions. It's got all this language, legalese. The 3 things that you need to know. First and foremost, you put your 3D glasses on, you have to know that declaration page. You look at that declaration page, and as Dr. Osborne already said, there may be bold print on that declaration page that says your carrier is going to charge you over the maximum rate that's been approved by the Department of Insurance. If you see that, you need to start calling. You need to start calling some folks. You need to call your agent, and you have to ask them about that and see if you have any other options. because you are going to be charged over and above with the maximum rate that has been approved by the Department of Insurance if you see that. That's called consent to rate. In the past, you signed a letter, and a lot of times the policyholder did not know what they were signing, and it says you consent us to rate this policy. And then at any time at renewal in the future, they can go up to 250% over the maximum rate approved by the Department of Insurance. Anytime. So this is why we have to keep in constant contact and communication with our agents here. So you know your declaration page. It's the one page that tells you what your coverage lines are. The one number that you need to know on that policy, on that declaration page, is that dwelling value. Your premium is based on that number. You need to make sure that that number accurately reflects the cost to rebuild your structure in that policy year. Look at your insurance policy as a contract with that company. And within that given year, it needs to accurately reflect the cost to rebuild that structure. And so through inflation rate factors, through other things, that number may go up, may go down. You want to ensure that that number is accurate to rebuild your house within that policy year. Now, we have storms that hit here, and then we have something called demand surge afterwards. As Dr. Osborne said, if you have that HO policy, you'll get 25% over that dwelling value, but that is the one number that affects your deductible, and it affects the premium that you pay. You will see personal property, you will see loss of use, you will see other structures. How many of you see other structures and there's a line there and an amount, but you don't have a shed in your yard, you don't have anything, other structures? It doesn't matter, it's just a percentage of that dwelling value. So number 2, dwelling value. Number 3, deductible. You've got to understand what your deductible is. This is not medical insurance. This is not paying the deductible based on how much the claim is. This is deductible based on that dwelling value. So let's go back. If your dwelling value is at $300,000 and it's only going to be $200,000 to replace your structure, to rebuild your structure, if for some reason the inflation rate factors were higher and whatnot, you're going to pay your deductible on the $300,000. Your deductible's $3,000, not $2,000. Your premium is higher than it should be, and so therefore, there's the hundreds, if not thousands of dollars. And you pay on your wind policy through the NCIUA and other policies on a per loss basis. It's not aggregate, it's per loss. So, per named storm. If you have a named storm, and we have one in the summer, we have another one, September, we get hit again, you're gonna pay that deductible twice. So you need to understand how much that deductible is and be clear on that when and if anything happens. All right, saving you thousands of dollars, what you need to know. First and foremost, Jackie's your friend. Steve is your friend. Stephen Gillis is your friend. They're here, they live here, they care about the community they live in, and they care about you. They're feeling your pain. The increases that Dr. Osborne mentioned, 9.8% increase for the beach areas to go into effect next year. In the inland areas, we're looking at about 4.5%. For years, the Rate Bureau has submitted rate filings asking for 30% capped increase, because what the data shows in their 2,500-page rate filing is that your insurance rates should go up 98%. That's what was in this last rate filing, a 98% increase, and they generously capped it at 30 to the request of the Department of Insurance. And so they ended up settling without having the hearing. Thank you, Department of Insurance, that you're only looking at a 9.8% increase. But the data in their filing said your rate should go up 98%. Talk to your agent, first and foremost, again. They live here, feel your pain. They're your first person to go to is you talk to your agent. Lots of things happen above their heads with the underwriter, with corporate, et cetera. And so some things on their inflation rate factors and things like that are completely out of their control. On any given year, typically 6 to 8% of policyholders file a claim on homeowners insurance. And that's when you have the contact with your agent. Typically you have a loss or it's at renewal and you got questions. You need to call, you need to ask. Know your renewal date. Put a sticky note somewhere. We're real concerned about with flood insurance, flood maps coming up, and Donna's going to talk about that for just a minute, that is the mortgage company or the bank going to drop the coverage if you're not required to have it? And then if it's escrowed, please pay attention to when your renewal date is. You want to have that out 30 days in advance to know exactly what's happening on that policy and know that declaration page. What's the most important number on your policy? The dwelling value, yes, Coverage A dwelling value. Know what your inflation rate factor is, understand your deductible, and please know the difference between actual cash value and replacement cost. Actual cash value, you're going to get depreciated value. You've got a house 15 years old, heat pumps this old, roofs this old, you're going to get less money than the neighbor that's got the full coverage replacement cost. You want replacement cost policy. There's nothing worse than after a major disaster, a storm, and finding out that you didn't have the coverage that you thought you did. Age of roof plays a factor. We're finding carriers are not writing if your roof is over 20 years old. We're also finding, sometimes just positioning flood vents in lower where they should be rather than higher saves you money. And polybutylene pipes have become an issue, and carriers, if you're looking for a new policy, will not write if you have polybutylene pipes. So we do know there's a private market for flood. New carriers writing flood policies. That's good news for you. We've got more competition here. More competition is good. Your resources here. I've come across these in the last 10, 11 years, and your insurance agent first and foremost, NCDOI, their website right there. The National Association of Insurance Commissioners has a great consumer guide to homeowners insurance, and it goes through questions that you could be asking and how to better communicate with your agent. There's a shopping tool there also, NAIC, National Association of Insurance Commissioners. There's also an app through the National Association of Insurance Commissioners that helps you in inventorying your home, and it's Scrapbook, but scr.app.book. Local home builders, great resource, the Outer Banks Home Builders Association, and you may see an Outer Banks Homeowners Alliance coming soon. Real quick, I do want to not only give special thanks to our Diamond Community Partners for allowing us to do this evening, but I'd also like to recognize those members in the audience that are part of the Board of Directors who have supported efforts and, through our legislative committee in working on your behalf on homeowners insurance. And Miss Lori Brooks is here, our immediate past president. Mr. Jimmy Anderson is our president-elect. And just stand up, folks. We're all friends here. Stephanie Walker is here. She's an immediate past president as well. Mr. David Ferguson, he's here in the back. And Mr. Richard Hess is here. Mr. Chris Tulin is here. And we also have our legislative chair and 2020 NC Realtors Region 1 Vice President, Ms. Kim Andre. And I did see Ms. Rosemarie Dozier, Ms. Mercedes Tabano in the back, who are also past presidents. Did I miss anybody? Anybody? All right. Thank you very, very much. I'm going to turn it over to Donna to talk to you a little bit about Dare County's flood maps. What, when, why?
I don't talk as fast as Willow does. So, my name is Donna Creef, and I'm the Dare County Planning Director. And I'm responsible for the unincorporated portions of Dare County. And for those of you who don't know that, that's Kylington, Martins Point, Hatteras Island, portions of Roanoke Island, and the mainland of Dare County. We spend a lot of time in my office spent talking about flood insurance and about how to mitigate the risk of flooding at your house. Advocacy of flood insurance is a big topic of our outreach activities. And when you guys came in this evening, you got a brochure. This is a brochure that was developed by Dare County in conjunction with the towns. Know your zone, and then we have our groovy little slogan here that we use. Low risk is not no risk. We use that in all of our outreach activities because it emphasizes the fact that floods can happen anywhere you live in Dare County. There's very few properties in Dare County that are not vulnerable to flooding. This is a flood map. We use these a lot in my office. This is an older flood map. It's the current flood map that was adopted in 2006, and it's still effective. Flood maps establish the flood zones, and you heard Dr. Osborne talk about A flood zones, AE flood zones. Those are the most predominant flood zones that we have in Dare County. The AE flood zone represents your 1% annual chance of flooding. A lot of people refer to it as the 100-year floodplain, 100-year flood zone. And that's very misleading because it implies that your property is only going to flood once every 100 years. We had Hurricane Irene in 2011. We had Hermine and Matthew in 2016. We had Tropical Storm Michael in 2018. And then we just had Hurricane Dorian about 6 weeks ago. That's 5 events in less than 10 years. So it's not a 100-year flood event. It's your 1% annual chance of flooding every year. And the flood maps in and of themselves do not account for all flooding risk. They don't account for heavy rain or areas that are poorly drained. Now, we are getting new flood maps. We've been talking about these new flood maps for 4 years. And I received word just last week from the state of North Carolina that we are going to have these maps adopted in June of 2020. June of 2020, that's been a long time coming. These maps are significant in their changes in the way that they will impact Dare County because hundreds of properties in Dare County are coming out of the flood zone and are being reclassified as a shaded X or an X zone. And that's significant because shaded X properties and X zones do not require flood insurance. They do not require you to elevate your first floor of living area, and they do not have use restrictions on them for areas that are below base flood. Even the properties that are remaining in the flood zone are having their base flood elevations dropped. An AE8 is dropping to AE4. So those are pretty significant drops that we are having, and we're concerned about that at Dare County. We're concerned by the numbers of the number of properties that are changing, because a lot of these properties that are changing have flooded in the past, and they have flooded repeatedly. We're concerned that folks are going to think, I'm in an X zone, my property's not going to flood, and I'm going to discontinue my flood insurance, and I'm going to tell you that that's a big mistake. Floods happen anywhere. 1 in 4 flood insurance claims happen in X zone properties. 1 in 4 flood insurance claims, that's a very significant number. Because of these concerns, Dare County is going to adopt what we're considering adopting. I don't want to speak out of turn here with my local elected officials here, but we're considering the adoption of a local elevation standard. So we're going to have the flood maps adopted. They'll be used for the insurance rating purposes, which will represent significant savings for property owners, and that's a very positive thing. But we also want to, from a regulatory standpoint, still have people elevate their structures and keep them from using areas that may be below that base flood mark that have flooded in the past. So we're considering what we're calling a local elevation standard, and that local elevation standard will treat those X zone properties as if it was a flood zone property. As we progress towards June 2020, when the maps are adopted, we'll be having more meetings and workshops where we'll be educating property owners and the stakeholders like the realtors and the insurance agents on how this local elevation standard will work. The most important thing you can do is find out how these new flood maps are going to affect your property. You need to have a conversation with your insurance agent to find out how your property is going to be affected by these flood maps. If you have a federally backed mortgage and your insurance is escrowed and your property shifts to an X zone or a shaded X zone, your mortgage company is probably going to cancel your insurance, and you're not going to know that until you get a letter that says, "Dear Ms. Creef, your insurance has been canceled because you're now in an X zone." So you need to know how these maps are affecting your property. You need to have that conversation with your insurance agent before your policy is canceled, because it's easier to modify your coverage than it is to start from scratch and get a new policy. So follow the progress of these flood maps. We do have a webpage, obxfloodmaps.com, and once we progress towards we get closer to the date of the flood maps, I'll be updating that web page with the meetings and all that we will be having. But again, the most important thing that I want to stress tonight is follow the progress of these maps. If you don't know how these maps are affecting your property, my business card is on the back of the brochure right here. Call me, email me, and I'll be glad to tell you what it is. If you're in one of the towns, you can contact the planning departments of the towns, or you can contact me. We all look at the same webpage to get that information. Thank you, Dr. Osborne, for you and your staff coming tonight. Willow, thank you for helping set up tonight. Thank you for my Board of Commissioners that are here, and thank you for all of you guys coming out tonight and taking your time out tonight. This has been very helpful information. I've learned some stuff tonight, and I hope that you have. I have some questions written on some note cards. We'll try to get through these. As Chairman Woodard said, if we don't get through them, we'll certainly respond. The question was consent to rate. What is it? Are we still dealing with it? What do you do if you've already or may have already signed the document? I don't know if Dr. Osborne wants to address that anymore.
What happens in our state is we are based on a rate bureau state. So what that happens, there's two sides to that. The rate bureau, as I said earlier, represents the insurance industry and then says this is the amount that we want in a rate. The Department of Insurance, we look at it statistically and analyze it to see whether or not that rate is too much, or it isn't, or it is. And if there's a maximum amount that is allowed in our state for homeowners, it's capped by the North Carolina Rate Bureau amount that's been decided by the commissioner through rate filings, as Willow and I have been sharing. So if an insurance company, though, can go above that rate if you consent to it. And I'm showing you how you sign your name to it. You used to have to sign your name. So you have to agree that it's okay with you for that homeowner rate to be above the mandated rate or the max rate that the commissioner of the Department of Insurance allows. If you don't sign it, the insurance company will not, they'll cancel your policy. So I think, as Willow Kelly said well, is that if you get those consent to rate forms, I would encourage you to look and see if there's a carrier that would allow you a better rate.
I hope this has been beneficial for you folks here this evening, and I want to thank Willa and Donna for the county and the Association of Realtors for putting this together, and certainly Dr. Osborne, thank you for your time. I get to have some one-on-one time with her tomorrow morning, so I've got some pretty serious questions to discuss with her tomorrow morning, so I look forward to that with you, Doctor. But thank you all for being here, and thank you for your participation, and we thank you for being here. Thank you.